Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Q&A Good Night. Today is Thursday, October 2nd. I'm analyst Jiang Jida. Before class starts, remember to like, subscribe, and share. If you have any investment questions, feel free to leave a comment. If I don't have time to answer your questions today, I'll make sure to address them one by one in tomorrow's class. Whether you leave your comments on the message board or in the chat room, I've basically read through all of them. So if I can't get to your question today, I'll answer it for you in class tomorrow. Also, a reminder, next week, on Wednesday, October 8th, in the afternoon, I'll be at the Yonghe branch office giving a talk about the Taiwan stock market. If you're interested in learning more about the Taiwan stock market or the international situation, feel free to reach out to our branch contact for more information. Good evening, everyone, and thank you for your support. I just saw that Maida has been leaving a lot of comments. Good evening to Gao Ganghuan, Hujuanjuan, Shishir, and Min, good evening, good evening. Also, Fei Diyu, good evening. I just didn't have time to answer your comment, but okay, good evening. I see your comment, okay. Now, let's take a look at today's investment highlights. Today, there's no need to worry too much, because the US government has already started its shutdown. What kind of economic data or fiscal or economic indicators will be affected by the shutdown? I'll give you a special reminder about that today. Why is it that the government shutdown doesn't hinder the bull market? Some people are worried that the US government shutdown might seem like it would impact the economy, fiscal spending, or the overall functioning of the government, but in reality, it's not quite that serious. Because as we've been saying repeatedly in our shows these past few days, the history of US government shutdowns isn't just about 1 or 2 days, and it's happened several times before. Whether it's been a Republican president or a Democratic president, there have been instances of government shutdowns. Today, of course, 2 major credit rating agencies, including S&P and Fitch, have also shared their views on the situation regarding the US government shutdown. We'll be giving our commentary on that today. In addition, there's talk about Trump missing a piece on the chessboard. What exactly is this piece? Of course, it's just about the appointment of a Federal Reserve official. Today, we saw a Supreme Court ruling. The Supreme Court opposed Trump's attempts to fire Federal Reserve Board member Cook. So, Cook still has the opportunity to continue serving as a board member at the Fed, at least until the Supreme Court hearing in January next year. In other words, until then, he can remain in his position at the Fed. In this year's October or December Fed interest rate decisions, Cook's influence will still be present. You might say, if Trump can't interfere and can't replace Cook, does that mean he won't be able to influence the Fed at all? Of course not, because there are still many ways he can exert influence. I'll explain more about that in a moment. So, what are some of those methods? On the industry side, there's also been a lot of news about Intel lately. Intel's enemies have become friends. Ever since. Starting last month, for example, the US government took a 10% stake, and also including SoftBank, Japan's SoftBank. They also invested $2 billion. In addition, the most important AI leader, Nvidia, invested $5 billion. With all this support from major players and capital, Intel's stock price has been rising steadily. And today, there's more news. It seems that AMD, which has traditionally been a rival and competitor to Intel, is now working on some kind of collaboration with them. Whether this news is true or not is still unknown at the moment, but how this information will affect Intel's future development is definitely something to keep an eye on. In addition, there's another company I often talk about, Meta, the main player in the metaverse. I frequently bring up Meta as an example because I think it's a prime representative of powerful political and business interests. Today, Meta has shown its true colors. What exactly did it reveal, and how is it related to AI? These are the kinds of company meeting topics you really need to pay attention to in the coming days. When you're managing your trades, you must keep this information in mind, because all of this will definitely impact what happens next. Whether the market in October or even Q4 will perform well, first, let's take a look at the economic data. Regardless of whether the US stock market will shut down, I think financial figures are still extremely important. Tonight, let's set aside whether or not this data will be released, because if there's a government shutdown, the US Department of Labor or related statistical agencies might not release it. Some data from the Statistics Bureau might not be released, or it could be delayed. Right now, we still don't know if tonight's 8:30 data on initial jobless claims will be released as scheduled. We're not sure, but let's still take a look at the initial and continuing jobless claims in the US. Last week, the number of initial jobless claims was 218,000, while the expectation was 223,000. These initial and continuing claims are higher frequency employment market data that are released every week, so you can get a sense of the job market's health in real time. Compared to monthly data like the ADP report at the beginning of the month or this Friday's unemployment rate or non-farm payrolls, these weekly initial claims are more frequent. So, to some extent, by looking at the weekly initial claims, we can get a pretty good idea of the overall employment situation in the US. So is it trending toward health or decline? Last week, the initial claims were 218,000, with expectations at 223,000. For continuing claims, last week's number was 1.926 million, while the expectation was 1.932 million. Just keep these numbers in mind for now. Why am I bringing this up? Because on September 18th, in the middle of last month, North Carolina, the number of continuing unemployment claims in that state originally. They didn't specify what caused the error, but this mistake led to an underestimation of the total number of continuing claims by nearly 20,000 people. In other words, the previous value for continuing claims was 1.926 million people, right? No, that's not right. If you add those 20,000 people back in, the actual number is close to 1.95 million, not the 1.926 million that everyone saw, which seemed to suddenly drop sharply. In fact, if you add those two together, it's almost 1.95 million people. So this week, if tonight's data is released, everyone should take a closer look to see whether the numbers will be revised. Will it stay at 1.92 million, or will it jump to 1.95 million? We don't know yet. When the data comes out, that's what it is. You can imagine that previously, because the US Bureau of Labor Statistics released non-farm payroll numbers that didn't meet expectations, and even the data for May and June this year was significantly revised, from 147,000 people down to just 14,000. This incident made Trump extremely furious, and in his anger, he replaced the head of the Bureau of Statistics. In other words, whenever you look at any economic data now, whether it's the initial CPI, non-farm payrolls, or anything else, you need to keep in mind that, because the head of the Bureau of Statistics was replaced, the authenticity of these numbers is questionable. You might want to take them with a grain of salt, maybe discount them by 10% or even 20%. That's the general idea. There will definitely be some embellishment or beautification of the data to some extent. As for what the real situation is, we honestly don't know. All we can say is, whatever numbers they release on the official website, we can only do our best to trust them. I just want to let everyone know that. Because the head of the Statistics Bureau has already been replaced by someone more favored by Trump, the credibility of the data is inevitably somewhat discounted. The same goes for officials at the Federal Reserve. Once he appoints his own people, of course, they'll lean more dovish. What does a more dovish stance mean? It means they're more likely to move toward cutting interest rates. Additionally, at 10 p.m. tonight, there's a data release, the US August factory orders month over month. The previous value was minus 0.3%, and the forecast is 1.4%. This will be announced at 10 p.m., so tonight, just paying attention to these two data points should be enough, especially the initial and continuing claims. Let's see if they're announced at 8:30 p.m. If so, we'll track them together. Alright, good evening LS, and also just now, hello to Sin Pan and Amy Lin. Sin Pan, you're from Pingdong, right? I remember when I gave a talk in Kaohsiung, a few students came from Pingdong and some from Kaohsiung. I think someone named Hector came from Kaohsiung, if I recall correctly. Jeffrey from Tainan is also from the Kaohsiung-Tainan area, I think. I'm not sure if he's from Tainan, but anyway, next week I'll be giving a talk at the Yonghe branch office. I haven't been to Yonghe that often before, but if you're from Zhanghe or Yonghe, or if you're from New Taipei or Taipei City, you can check with the branch office to see how you can join this seminar. Speaking of Yonghe, you probably have some impression of it. Yonghe is a very small district in New Taipei City called Yonghe District. Actually, I lived there for about 25 years, so I should count as a true Yonghe local. Even though I was born in Kaohsiung, I'm pretty much a real Yonghe person, having lived there for 25 years before moving. I lived there from childhood until now. So, for those who don't often go to Yonghe, you might know that the roads there can be really confusing. Because Yonghe is really small, and the roads are also narrow, but they're all interconnected. It's super convenient to get to Taipei City, Zhanghe, Banqiao, and all sorts of places from there. When people go to Yonghe, they often get confused by the street names. Like, Yonghe has Zhongshan Road, Zhongjing Road, and Yonghe Road, but Yonghe's Yonghe Road is different from Zhanghe's Yonghe Road. And Yonghe's Zhanghe Road is also different from Zhanghe's Yonghe Road. It's a really strange concept. To give a simple example, people often mix up the street names. For instance, there's a bridge called Fuha Bridge, which connects Yonghe to Gongguan in Taipei City. Then there's another bridge called Yongfu Bridge, something like that. But after you cross Yongfu Bridge, there isn't actually a Yongfu Road. And if I remember right, after you cross Fuha Bridge, I'm not sure if it's after Fuha Bridge or Yongfu Bridge. Anyway, when you come down, it's still called Fuha Road, even if you come down from Yongfu Bridge. It's called Fuha Road, but coming down from Fuha Bridge, it's not actually Fuha Road. That confuses drivers in Yonghe. For example, from Taipei, after crossing Zhongxing Bridge, number 2, the road isn't Zhongxing Road, it's Yonghe Road. This really messes with your head. But actually, if you figure out the street names, Yonghe is well connected and transportation is convenient. Yonghe soy milk is all over Taiwan. At the end of Zhongxing Bridge, right after you come down, there used to be 2 Yonghe soy milk shops. Originally, there were 2. One was called something like New World King, or similar, and right next to it was another Yonghe soy milk. These 2 competed for decades, really going at it for a long time, and in the end, only one was left. I think it's called New World something Yonghe soy milk now. They later renovated that place, and honestly, the food there is still pretty good. It's quite unique. So now, if you come from Taipei and cross Zhongxing Bridge into Yonghe, the very first Yonghe soy milk shop you see right by the bridge is the only one left. That's the original one. All the others nearby have closed down and disappeared. So Yonghe soy milk is actually pretty famous. Of course, the famous things in Yonghe aren't just soy milk, there are lots of others. I'll share more with everyone when I have the chance. Anyway, next time. On Wednesday, I went back to Yonghe for a stroll. I don't live in Yonghe, it's been a while since I moved. But I did live there for 25 years, a long time. My son is renting a place in Yonghe. Housing prices there are high. Emily asked, let me ask about Meta. I'll get to that. It's perfect timing to talk about Meta, as I was about to bring it up. I'll show you Meta. We'll discuss Meta's stock price and position. Related news, Meta showed its true colors today. This affects everyone directly. If you use Facebook, or use Instagram, or any of Meta's products, including things like smart glasses, headsets, or Instagram, you need to be careful. You should really think about why this is happening. Because Zuckerberg has shown his true colors. Of course, this move is for the benefit of his company, but you need to understand what he's really trying to do. I'll explain that to everyone in a bit. Now, moving on to the Supreme Court, let's talk about Trump. Trump has been trying to replace Federal Reserve Board member Cook. He keeps trying and trying, digging and digging, uncovering all sorts of inside stories, but he just can't find any evidence to fire him. Even though he previously tried to use things like alleged real estate loan fraud, false loan information, or fake addresses as reasons to get rid of Cook, so far, the Supreme Court's ruling is to reject Trump's immediate removal of Cook and allow him to stay on. There will be a hearing on the removal case in January next year. So, with one less Fed official, Cook, Trump would have more room to maneuver. But does it really have a big impact? Actually, not really. Not really. Let me quickly break down the Fed's leadership for everyone. Chair Jerome Powell, will be stepping down in May next year. So once Powell steps down in May, there will definitely be. He'll be replaced by someone more favored by Trump, so one of the voting rights is the Fed chair, which will change in May next year. Second, among the current Fed governors, there's Bowman and Waller, both of whom lean more toward Trump, since he was the one who appointed them. Then there's a new governor who, before the Fed's policy decision in September, before September 18th, on the 16th or 17th, had already secured a spot. That's pretty impressive. He finished everything, took the oath, and assumed office in less than a week. He was in. Who is this person? He's 41. His name is Milan, or Miran. He's a Harvard PhD and was also appointed by Trump. He's taking over the position of governor from Kugler. So if you look at it this way, Powell, the chairman of the Federal Reserve, is also a Trump appointee. Then there are 3 other governors, Waller, Bowman, and Milan. All of them are Trump people. So that's 4 votes, right? 4 votes. And if you look at the rest, if you do a little maneuvering, mix things up a bit, among the 12 voting members, it's pretty easy to get more than 6 votes. 6 votes, maybe even a majority. So in October, December, and especially next year, when it comes to monetary policy, if he wants to lower interest rates or make adjustments to monetary policy, some easing measures, it's actually much easier for Trump to push them through. So if you say that losing Kugler, Trump wouldn't have any leverage over him, but that's not necessarily the case. Anyway, looking ahead, not just the future, but even now, from October to December and even into next year, if you look at the entire Federal Reserve, in reality, it will still be subject to political interference, and the direction it will take is toward a dovish, more accommodative stance. Also, Why does the US government's official media keep saying there's no need to worry? We've already told everyone for 3 days now, don't be too anxious. First, this isn't something that just happens for a day or two, and it's actually quite common. In addition, essential employees will continue to work as usual. Counting those outside, about 75% of employees might be on leave. Vice President Harris said she doesn't think the shutdown will last long. What does that mean? It means she's already predicting in advance, basically telling everyone that this time, the Republicans and Democrats. They might have disagreements on certain issues, like Medicaid, medical spending cuts, and other items, so they can't get the budget bill passed, and as a result, the government will still shut down. But this situation won't last long, it won't be for a long time. In other words, everyone already has a sense of what to expect. As long as the shutdown doesn't last more than 30 days, doesn't go over a month, it won't cause any major problems. Just remember, use 1 month as your benchmark, within a month. If they reopen within a month, or actually, it might not even take a month, maybe just a week or two, they could open up again. And once they reopen, the US stock market will shoot up, turning bullish and heading upward again. That's basically the idea right now. When the government is shut down, the US stock market still goes up. If they're about to reopen, the market just keeps rising. That's basically the idea. So honestly, whether the government is shut down or open doesn't really have much impact on the market right now. Right now, the market focuses on AI, and capital expenditures, how much CSP spend, what Nvidia and TSMC do. Everyone watches those things. Trade wars, or geopolitical risks like Ukraine, Russia, Israel, none of that really matters. The market just wants to know how much each company invests in AI, how much capital expenditure goes in, and the revenue and profit numbers for the third quarter. That's what everyone watches. Nobody cares if the government shuts down. You have to understand that. With everyone's attention focused over there, of course Trump says, well, a government shutdown is fine. It'll just cut out some waste and get rid of some unnecessary staff. He thinks a shutdown is actually a good thing. In his view, it probably won't last more than 2 weeks, about 10 days to half a month, and things will settle down. It's unlikely to drag on too long, because if it does, economic data can't be released, the government can't function normally, and things like public opinion polls and daily life will be affected. If things drag on, there will start to be some complaints from the West, and at that point, it might not be good for Trump's poll numbers, nor for the Republican Party's reputation. Don't forget, there's an election next year. So in the end, whether it's the Republicans or the Democrats, both sides have to face elections next year. If things go badly and everyone gets stuck in a deadlock, it could end up making life hard for ordinary people, and then, when the public starts to sigh and complain, it won't matter which of these two candidates or which party puts forward their candidate, none of them will benefit. So they all understand what's at stake. That's why I said it'll probably be settled in about 10 days to 2 weeks. Also, regarding credit ratings, there's Fitch and S&P, and another more famous one called Moody's. Whether it's Fitch, S&P, or Moody's, anyway, let's focus on the key points from Fitch and S&P. Let's pull out the key points and keywords. They said that a short-term government shutdown will not affect the US sovereign credit rating. In other words, the current rating, whether it's AA+, AA-, or even AAA, doesn't really matter. A short-term shutdown, meaning within about 1 month, actually has no impact on the US government's sovereign rating. S&P said that for every week the government is shut down, GDP will be dragged down by about 0.1 to 0.2%. Also, because economic data can't be released, since the relevant government departments are closed, there's no way to publish the data. Without this data, the Federal Reserve has no basis for making monetary policy adjustments. They can't find the data, no employment numbers, no non-farm unemployment rate, no initial claims, or inflation data like CPI, etc. This might make it difficult for the Fed to make interest rate decisions at the end of October. If the shutdown drags on, then. However, as for the accumulated economic pressure or the economic blow that could result, that's S&P's perspective. So, looking at this, what these two rating agencies mean is that as long as the government reopens within a month, all these issues they mentioned won't really be a problem. You might ask. But teacher, S&P said that every week the government is shut down, it drags down GDP by 0.1 to 0.2%. If the shutdown lasts for 4 weeks, a whole month, wouldn't that mean the impact is multiplied by 4? That's 0.4 to 0.8%, which is almost a full percentage point of GDP lost. What should we do then? Wouldn't that mean Q3 or Q4 would see a major decline? You don't need to worry, because... You know, according to Bank of America Securities just a couple of days ago, they also discussed this issue and did some research on it. They did some surveys and analysis, and they said that although the US government shutdowns do have some impact on the economy and GDP, different shutdowns have different levels of impact. In the end, these effects are usually fully made up in the following quarter. In other words, even if the government shuts down every week or every month, maybe it would drag down GDP by about 0.5%. But given the current state of the US economy, corporate profits, corporate revenues and expenditures, and overall consumer spending and market consumption, it's not enough to cause a significant recession in US GDP for the third or fourth quarter. At least for now, it won't. We're even saying that for the fourth quarter, since it's already October, the fourth quarter GDP won't see a sharp decline just because of a government shutdown. That's because, as we just mentioned, factors like corporate spending, consumer spending, and investment are all still holding up. There's a good chance that all of these losses or declines can be fully made up, so everyone should see this as a short-term issue unless it really drags on for the long term. What do we mean by long term? Anything over a month, then we'll need to take another look. If the shutdown lasts for more than a month, although I think that's unlikely, if it really does happen, we'll reassess then. But for now, the chances are slim, really slim. Good evening, John Ellen. You have the same last name as me, so we must share the same ancestors. What's this, Kisa? Is it pronounced Kaiser? Okay. You're heavily invested in Tesla and Nvidia. Can I talk about Tesla and Nvidia? Sure, I'll talk about Tesla today. As for Nvidia, since I won't be covering it today, I'll still give you a quick update. Basically, Nvidia is still in a bull market right now. The bullish structure is still intact, and it keeps hitting new highs almost every day. A company that keeps hitting new highs is in a bullish structure, and that hasn't changed. So what should you do? Don't chase the stock when it's making new highs. Instead, wait for it to pull back after hitting a new high, maybe when it touches the 20-day moving average, the 10-day moving average, or when there's an intraday dip, then buy in on the lows. Buy in lightly and build your position in batches. Let me say it again, stocks or indices that keep making new highs are in a bull market. For example, the US stock market, the Taiwan stock market, the Japanese market, the Korean market, it's the same everywhere. As long as it's making new highs, it's a bull market. If it's not a bull market, it won't make new highs. That's the simplest concept. New highs mean a bull market. But even in a bull market, it's not like you can just close your eyes and go all in, or act recklessly. You have to remember, every time it hits a new high, sell a portion first. Why? Because every time there's a new high, someone will sell. So, each time it hits a new high, you can trim your position a bit. After you trim, if it keeps going up, it will eventually pull back. When it pulls back, you can look for a good entry point, maybe when it hits a key moving average, and then build your position again in batches. Take profits in batches too. That's the idea. Hope that answers your question. When a company is hitting new highs, I believe there's nothing wrong with its industry fundamentals. Its fundamentals, revenue, and profit trends are all solid. Globally, when it comes to AI chips, basically 80% to 90% of them have to use Nvidia's chips. There's no way around it. You can only buy Nvidia, you can only buy Jensen Huang's products. That's why Jensen Huang is worth so much, because the whole world needs his chips to develop AI. We've talked about this before, whether it's general-purpose chips or ASIC-related chips, these are two different fields, and Nvidia, its main focus is on general-purpose chips, specifically GPUs. So, as for Nvidia, if you have some in your hands right now, since the price has gone up and hit new highs, you can sell a portion of your holdings. Sell a portion, and if the price drops, you can buy it back. That's basically the idea. I still want to remind everyone about Nvidia and Jensen Huang. Since May of this year, he has been filing to sell 6 million shares of stock. You don't need to worry about whether these 6 million shares are new shares or old shares, whether he's selling his previous holdings or shares converted from options. Don't worry about those details. Whether it's new shares or old shares, selling is selling. As long as top executives are selling shares, it puts pressure on the stock supply. Whenever high-level management sells shares, it creates pressure on the stock. But you might ask, teacher, if he's selling shares, why does the stock price keep hitting new highs? That's because the fundamentals are extremely strong right now, and the global AI trend is getting a lot of attention. So even though Jensen Huang is selling shares, the impact isn't significant. Why? Because every time he sells, there's a lot of positive news and momentum that pushes the price up. So right now, he's just selling along with the trend, and it's not a big deal. It won't cause the stock price to crash. Why? Because the external forces are just too strong. But I still want to remind everyone, you should keep this kind of stock selling in mind. You can learn from Jensen Huang, every time the stock hits a new high, sell a little, just like he does. He recently sold at $184,178 to $184, so he sold some of it. You can also refer to Huang Wenxuan's approach. Of course, I will tell you some related information about Tesla later. Let's take a look at the Public Security Index 10 years ago. Part of it remained at 4.1, and the total green remained at 3.62. Is it still relatively dovish or tepid? It has been reduced to nearly 4%. The market has maintained 1.8 interest rate cuts, fluctuating between 1.8 and 1.9, or even 1.7 times. Regardless, the follow-up in October and December is relatively straightforward, so we will observe it again. The US dollar index remains relatively weak and volatile, with a slight drop of 0.1 percentage point today. This 50-day moving average, the 50-day moving average is a daily K-line indicator. Trump wants to cut interest rates, and the US dollar index is cutting interest rates. You say the probability of a sharp rise is low, but it's just fluctuating and consolidating. As for the power risk issue between the US and Korea, just briefly review it. The US and South Korea are discussing how to reach a foreign exchange agreement to avoid foreign exchange manipulation. Just review this. On the surface, you say we shouldn't interfere with each other's foreign exchange transactions. He also said the same thing with Taiwan, Japan, and now South Korea. So, has an agreement been reached? Yes, everyone is talking about it, but reaching an agreement is just reaching an agreement. In the end, he left a hint, just a hint. He said that if governments of various countries want to intervene, the premise is that if the exchange rate experiences excessive and drastic fluctuations, like an unreasonable appreciation, where it keeps rising for no reason, or an unreasonable depreciation, where it keeps falling for no reason, then the government can step in to intervene. So, how do you define what counts as an unreasonable appreciation or depreciation? That's really a matter of perspective. Some countries might think that if their currency appreciates by 1% within a week, that's already unreasonable. Some countries feel that if their national currency continues to experience a persistent and significant depreciation over and over again, meaning it depreciates, then depreciates further, and then depreciates even more, and so on and so forth, losing its value against other major currencies, that this ongoing devaluation presents a very serious and complex economic problem for them. By the way, it's worth noting that the reputable news agency Reuters previously reported that the United States government, specifically, took a strategic and significant stake in a rare earth company, which is a critical industry for various advanced technologies and national security, right? This action by the US government highlights the strategic importance placed on securing access to these vital resources. Montreal NP Company, this company, the US government invested in it, apparently wanting to get involved in some rare earth projects. The US government took a stake, and also, Canada's American Lithium took a 5% stake to work on lithium batteries and lithium materials. Now, I've heard that some top executives from Australian companies have also spoken out. What did these Australian business leaders say? He said that for some of Australia's important key mining companies, the US government is also in talks to invest. So what does that mean? Think about it, MP is working on rare earths, and Canada is working on lithium. So what is the mining industry about? It's also about rare earths and other relatively rare, newly emerging resources. If you want to make lithium batteries or electric vehicles, you need lithium, right? Now, some of these key minerals in Australia's mining sector, no matter what kind of mineral it is, as long as it's a rare mineral, the US government is investing in these companies. Why? Because they want to use these key minerals to do what? To find alternatives and replacements. Alternative supply chains. Alternative to what? Alternative to dependence on and demand for China. So now, in fact, let's put it more plainly, the two countries, China and the United States, are now on the table, and neither dares to impose large tariffs on the other. In the past, it was like, I'll slap a 145% tariff on you, I'll hit you with 125%, and they just kept going back and forth, making a mess of things. But after less than 2 months, both sides couldn't take it anymore. Why? Because China needs America's high-tech products and advanced equipment, while the US needs China's cheap everyday goods. This even includes something as important as rare earth elements, because rare earths are used in things like defense products, electronics, generators, and wind power generation. Batteries, electric motors, missiles, all of these require rare earths. Rare earths are extremely important, and the world's largest rare earth producer is based in. And who is the biggest producer? It's China. So everyone has to pay attention to China's attitude, otherwise you can't develop these high-tech industries. Now, from the start of the tariff war in February all the way to September, it's already been almost 7 months. Right now, there are only 2 countries that don't dare to go all out against each other, and that's China and the United States. Like I just mentioned, they're still holding back against each other. There are some very important mutual dependencies between them. So, under this kind of dependency, are the 2 countries trying to suppress each other with tariffs? Well, China has always been making money from the US, constantly exporting goods to them. China exports to the US and earns a huge trade surplus, making a lot of money. That's why the US isn't happy about it. The US says, I'm going to impose tariffs on you, I'm going to tax you, so your export profits will be a bit less. Many people are taking action on this. So gradually, from Trump's first term up until now, you can see that the Chinese government has been continuously shifting what was originally its largest export market, the US, and diversifying it to other countries. They might cooperate with Japan, with South Korea, with the EU, with Southeast Asia, and with other countries, even African nations, constantly making various import-export trade agreements or partnerships. Why is that? They want to gradually separate the US market, which is their largest, so it won't be. So that no single country dominates. If one country dominates and that trade relationship collapses, then China's economy would be affected. So, over the past years from 2018 and 2019 up to now, over these past 5 to 6 years, they've been working hard at what? Constantly diversifying their trade risks. Did the US ever diversify? No, it didn't. Before, the US was always like, China, sell rare earths. But after the trade war, they realized something was off. Once the trade war began, China ignored them. Why? Because China had quietly diversified its trade, so it didn't have to care about pleasing the US. The US couldn't diversify, it needs rare earths for high-tech industries. The US-China trade war couldn't go on. When China restricted rare earths, the US was in pain, unable to move, so they compromised. The US has finally learned its lesson and wised up. Now, the US government has started investing in MP materials, and is also cooperating with Canada, Australia, and other countries to gradually develop some rare earth mines. Why? Because they hope that one day they can break free from relying solely on China as the main supplier of rare earths. In the future, I think, anyway, both China and the US are working hard to reduce their dependence on each other, through the trade war, through rare earths, and so on. They just keep quietly working behind the scenes, paddling along, until one day, when their mutual dependence has decreased enough, then the second wave of the trade war will be different. That might still be a long way off, maybe several years. Regarding rare earths, it's not possible for the US to immediately give up on China. It can't be done, they must lay out plans. Mainland China took from 2018 until now to reduce reliance on the US. As for oil prices, they continue to weaken, so we won't go into detail. Today it went up slightly by 0.03%, but overall it's still on the weaker side. So tonight, at 8:30, let's check if initial jobless claims have been released. At 10 p.m., there's the factory orders data. I just checked at 8:30, and it seems like, because the US government shut down, these numbers haven't been released. None of the initial jobless claims data has been published. We'll just have to see if the US August factory orders data comes out at 10 o'clock tonight. Either way, since the government is shut down and the data isn't released, it is what it is. Since there's no data, what can you do? You can only look at the data that has been released. For example, yesterday and today there might be some related PMI data, or like yesterday, there was the important ADP private payroll report. Didn't it show a negative 32,000? That's the number of jobs, the employment number. It decreased by 32,000. They revised last month's data, 54,000, but after adjustment. After the revision, it was a decline. Overall, this shows the US job market looks relatively weak, more sluggish. Weakness means the Fed is more likely to cut rates. Yesterday's ADP report confirms the US job market is still relatively weak, and that's enough. Regarding earnings reports, and also, National Day, October 10th, is National Day, and the Taiwan stock market closed. No trading on Taiwan Stock Exchange, but US stock market open as usual. Starting October 10th, many third-quarter earnings reports released in the US market. For example, leading on National Day are Delta Air Lines and BlackRock. Mid-October, banks like JP Morgan Chase, Wells Fargo, Goldman Sachs will announce third-quarter earnings, kicking off financial reports. This round of third-quarter earnings will greatly impact the market as it's at a historically high level. Any small change, good or bad, will show effects and stock prices fluctuate. Volatility will get bigger, so everyone needs to pay attention to Q3 market trends. Although Q3 earnings reports are expected to look good, and most companies perform well, a few might fall short, miss forecasts, or have uncertainties. Market could see significant swings. Be especially cautious. As for the industry side, let's look at Intel. Alright, thank you all. I hope everyone has gained something from this session. The best way to give back to the teachers at Kinyuan or to Kinyuan itself is for you to make money from your investments. That's the most important thing, right? If you keep making money, you'll keep trading in the market for the long run. To put it bluntly, whether you're trading Taiwan stocks or US stocks, as long as you keep trading and making money, just keep trading. If you trade, we earn transaction fees. It's that simple. As long as you place orders through Chiwani, whether it's Taiwan or US stocks, as long as you trade, we get transaction fees. With transaction fees, everyone wins. If you make money, and you watch Chiwani Good Night, Chiwani Good Morning, or Chiwani Morning Call, or any of our President Fans programs, and these shows and messages help you become more stable on your investment journey, that's great. Then we can all keep growing, keep making money, keep profiting, and keep trading together. That's a win-win, and as long as you keep trading, the Kunyuanjia program can keep running. Why? Because we need to pay our employees' salaries. Now, let's look at Intel. Today, Intel mentioned that its main competitor, AMD, now, this is just a rumor, and there are all kinds of rumors in the market, all sorts of wild stories, anything you can imagine just to push the stock price up. So, what's this rumor about? The rumor is, it says that Intel's original competitor, AMD, might be looking to collaborate with Intel in semiconductor foundry services. They're discussing whether to bring AMD in as one of their clients. Let me first explain to everyone what kind of companies AMD and Intel are, and what the concept is here. Intel and AMD are competitors, especially in the CPU sector for personal computers. Speaking from experience, in the past, when it came to Intel, our personal computers, whether desktops or notebooks, the most important component was the CPU, which stands for Central Processing Unit. You could say it's the heart of a computer. In the past, strongest CPUs were from Intel. For example, we talked about the 800386, 486, 586, then later Pentium series, Core series, and so on, many, including Celeron series. Pentium series had Pentium 1, 2, 3, and 4. Everyone probably remembers commercials well, the ones with Pentium people, the Intel people, dressed in blue, covered in blue, making ads years ago. That was Intel's tradition. Now, Intel and AMD. Originally, Intel was extremely strong. Intel's CPUs were so powerful that they almost had a monopoly. But in recent years, you can see that AMD has been standing out more and more. The stronger AMD chips aren't the Benton series, but rather the ones called Ryzen. The Chinese translation is Ruilong. The Ryzen series chips, like the Ryzen 9800X3D and many others, have been selling extremely well, especially in the esports and gaming sectors. A lot of people are buying AMD chips for their CPUs instead of Intel, because AMD performs well in many computer games, offering high value. It provides high performance and computing power, yet is cheaper than Intel. Intel's CPU market share has been very high, perhaps 70 to 90%. Recently, Intel's market share shifted to around 68%, while AMD's CPU market share reached 32%, a 6-to-3 ratio. This explains their struggle to gain PC market share, making them a long-standing competitor. AMD's chips have long been high-end, including current GPU-related chips. Some GPUs specialize in AI, including flagship AI chips like the NI 300, 305, 308, 350, 3453, and later 360, 380. All high-end GPU chips, including the GB series, GB200, 300, and previous H100, H200, and B100. TSMC manufactures all B200 chips because TSMC produces high-end, high-performance processes and holds strong patents. 2 nanometer, 3 nanometer, and 1.5 nanometer are all very strong. Therefore, high-end chips must be outsourced to TSMC, not Intel or Samsung. Thus, TSMC is the foundry for AMD's high-end chips. Whether you want a CPU or a high-end GPU, a GPU is a graphics processing unit. A CPU is a central processing unit. AG and AC are different. AMD also uses TSMC for the GPU. Here's the point. There's a rumor AMD may turn to Intel for wafer foundry. Is this possible? I think the probability is very low. I'm not saying it's impossible, but I think the probability is very low now. Why? First, aren't they CPU competitors? They are. Since they're competitors, it's strange logic. If we compete, why would I have you manufacture my product? Isn't that weird? If I'm competing with you, with CPUs, and I have you do the manufacturing, what if you mess with my product? Wouldn't my products not selling? Imagine people playing games and the CPU burns out, because Intel manufactured it. But whose brand is it? It's AMD. Customers would. Who would customers blame? AMD. They wouldn't buy AMD products. They wouldn't blame AMD for handing products to Intel for manufacturing, right? Think about this relationship between competition and cooperation. If I'm your competitor, how could I let you manufacture my products? It doesn't make sense. It doesn't. Intel's foundry technology, their wafer foundry technology, whether CPUs or GPUs, these high-end products require high production capacity, high stability, and results, efficiency, and yield must be extremely high. So who do you go to? It wouldn't be Intel, because Intel can't. So who do you turn to? TSMC. Since Intel can't deliver, why would AMD hand wafer foundry to Intel? It's unlikely. This doesn't make sense. One is a competitor, and the other is about yield. You're my competitor, and your yield isn't, so how could I work with you? Unless what? Unless AMD really is under pressure from the Trump administration, like, the US government has already invested, SoftBank has invested, Nvidia, the richest company, the most profitable, with the highest market cap in the world, almost as much as the US dollar itself, with such a huge market cap, the #1 in the world. Even Nvidia has invested in Intel to save the domestic semiconductor industry. They're all trying to save it, our government is trying to save it, so is there any way you could say no to helping out? At the very least, you have to throw in something, pave the way a little. Unless it's because AMD is under pressure from Trump, then he'd have no choice but to cooperate, unless that's the case. Now, cooperation doesn't necessarily mean handing everything over. It might just be lower-end stuff, products like older generations of server chips, or chips for personal computers, the more low-end ones. Maybe, under government pressure, he'd let Intel manufacture those, let Intel make some money, that's the idea. But if you're saying full cooperation, like, wow, all the wafer foundry, CPU, GPU, where they were competitors and now everything is merged, I think that's extremely unlikely. So even though this rumor made Intel's stock jump 7% yesterday, I think we should just wait and see. This situation is a bit like when rumors said TSMC would invest in Intel. It's like when people speculated if TSMC or AMD would invest in Intel, same idea. They're competitors. If your competitor does your manufacturing, you worry Intel might take your tech, or yields suffer because Intel can't produce products properly, leading to defects. Many issues. So, take this news with a grain of salt, it might just be a rumor. I don't know future developments, but keep this rumor in mind. Intel's stock price, on the weekly K line, went up 1.24%, pretty good. It's a dream of corporate transformation and a turning point. We've discussed this platform consolidation on the weekly K line level from last September to this September. It's been consolidating for a whole year. This platform consolidation, this blue dashed area, the low is around $17 and the high is about $27. During this period, it consolidated for a full year, and only recently managed to break out. Yesterday, it was said that, now that it's close to $36, should you chase it? Is there a chance for further development? I think there is still a chance for future growth, because so many big investors and wealthy backers are supporting it. Meta, Chai, and others, many companies and investors are backing it, which is certainly great. There's definitely a chance for future development and for it to become a major player. But in the short term, I still want to remind everyone, when you see these bullish markets, these skyrocketing stocks, it's exciting and tempting. I know your hands are itching to buy, and I totally get it. But you have to remember, while making profits, you also need to consider the risks. Let me explain something. This platform has been consolidating for the past year, right? Over the past year, the low was around $17, and this resistance level, this line here, was about $27. So from $17 to $27, you can calculate a basic range, a basic space. Now, how do you add a one-to-one move to that? You need to know how to calculate it. All I can say is, you have to be precise with your calculations. If you keep calculating, you'll realize that, based on the weekly chart, maybe Intel's weekly chart will face technical resistance at a certain price in the short term. That means, when the price is near that technical resistance, you shouldn't rush in to buy. Understand what I mean? I've given you my conclusion. Whether to buy or not, have your own measure. It's not bad, it's a turning point for the company, which is good. But the best buying opportunity probably isn't after it's up 3 days in a row. Wait for a pullback, then look for a better entry. I think that's a safer approach. Just subtract levels to get a rough idea of the range, and you can figure out the potential move. Let's talk Tesla. Tesla expects to announce its Q3 delivery numbers today, October 2nd. The current market estimate is 448,000 vehicles. Many investment institutions, including Goldman Sachs and UBS, have all raised their delivery estimates for Tesla. Why? Because they said that by the end of September, the US electric vehicle subsidy is supposed to end, right? So, a lot of Americans are rushing to buy electric cars before the $7,500 tax credit runs out. In this situation, everyone is hurrying to buy EVs before the end of September, because if you do not, you will miss out on the $7,500 tax credit. If you do the math, $7,500 is about 230,000 to 240,000 NTB, so that is a pretty significant amount. Besides this rush to buy, there is another interesting point. September is key. In the European market, over the past 6 months to a year, sales have been declining. For about 8 consecutive months, Tesla's deliveries in Europe have been dropping, 8 straight months of decline. But in September, you can see that sales in France and Denmark actually grew. That is right, they actually saw positive growth. France grew by 2.7% and Denmark by 20.5%. As for Sweden, although Sweden has seen 9 consecutive months of decline, dropping by 64%. However, in the previous 8 months, overall European sales had already dropped by 43%. This suggests the worst is likely behind us, primarily because Musk has returned to focusing on his main business and is staying away from politics. Staying out of politics and focusing on the core business is positive for Tesla as a company, its shareholders, and its stock price. Remember, stay away from politics and get back to business. That's the way to go. The core business is key. Didn't Musk recently spend $1 billion to buy his own company's stock? He bought it at prices ranging from $372 to $396 per share, purchasing 2.57 million shares. Remember this price range. It represents Musk's support level. Musk's support level is between $372 and $396. That's his buying price. His average buying price is within this range. This range has become a solid, ironclad support. If it hits that support, buy earlier. If it drops below, your buying price is even lower than Musk's. Do you think Musk would let that happen? It's unlikely. He cares about his image and reputation, so it's hard for him to let the price fall below his Musk support range. Keep this in mind. $372 to $396. Musk spent $1 billion buying shares. Yesterday, Tesla went up 3.3% strong. As for momentum, let me tell you now. This momentum hasn't ended. The upward momentum is ongoing. When will it end? Some ask about the previous high, around $488. Can it reach that level? This short-term momentum is still there. So, can it reach the previous high? We taught everyone how to calculate this. This is an ascending pattern, with the low at 214 and the high at 367. If it follows an ascending flag pattern, you can calculate the minimum upward move a 1-to-1 ratio. This helps determine if it can approach or break the previous historical high of 488. The minimum upward move from this triangle consolidation was met, the first target reached long ago. Now it's at the second target if the ascending flag can reach it. No major issues, it's recovering from a bad European period, slowly returning to. There's a lot of news about Musk's increased investment and the return to core business. Let's look at the third quarter delivery figures today. If there's any better than expected news, I think Tesla's stock price momentum should still have a chance to rise. The premise is whether the third quarter delivery figures announced tonight or even tomorrow are as good as the market says, exceeding 448,000 units. If so, this momentum is reasonable and will continue to push higher. But how high will it rise? We need to know how to calculate the minimum increase in the second wave, because sometimes we can't tell you this because of regulations. It's a little bit complicated, so I can't teach you how to calculate it. Someone asked Louis Sheep if the number of new travelers in the United States has been announced. Yes, because it seems that they haven't announced it yet. That means the US government is closed, so the announcement of the number of travelers may be delayed. As for when it will be delayed, will it be delayed until the US government reopens? Or when will it be announced? We don't know. Anyway, if they announce it, we'll see. At present, the neighborhood committee and mayor are relatively weak. Let's talk about Apple as well. There is also a rumor that Apple will focus all its resources on smart glasses. Launching in 2027 to compete with Meta's Ray-Ban smart glasses. 2027 is still a long way off, 2 years from now before they release a product to compete with Meta. Isn't that too long? Yeah, it's too long, so treat it as a rumor for now, because it's a long way off. In 2 years, Meta might release an even more advanced pair of glasses or something better. We call these wearable devices, and in 2 years there might be some crazy new thing. But on the other hand, it means Apple is going all in on these wearable devices. There are rumors they might pause the Gen Pro headset. Honestly, when it comes to the Gen Pro headset, I think this device is not user-friendly. It's not easy to use, even though it's expensive. It's considered high-end because it's so expensive. One device costs $3,500, which is over 110,000 new Taiwan dollars. Who would want to buy a device that you put on like a full-face helmet? You put on this full-face helmet, and then you're just sitting there giggling to yourself, laughing because you're watching some VR videos and having a good time. Just imagine, you're wearing a full-face helmet, and the power consumption is probably just 1 or 2 hours and the battery's already dead. You're basically wearing a helmet, using your computer or playing games by yourself. Doesn't that seem weird? Plus, it's heavy and the battery life isn't enough. Compared to Meta's head-mounted devices, or even the new smart glasses Meta just released, or Xiaomi's smart glasses, Those are way more convenient. So when Meta launched their smart glasses in September, they packed in a lot of features, built-in displays, gesture controls, and more. As time goes on, more and more new features will keep coming out. So all I can say is, let's just keep an eye on these rumors for now. But if Apple really does pause the Vision Pro to upgrade it and shifts their focus to smart glasses, I think that's the right move. Because, honestly, those head-mounted, full-face helmet devices just aren't going to catch on. They're way too niche and won't help Apple much. If you want to do AI, or make wearable devices as popular as the iPhone, a head-mounted helmet just isn't going to sell. No one's selling those. Have you ever seen anyone walking down the street wearing Apple's head-mounted device? No, right? But have you seen people wearing Meta's smart glasses? Or Google Glass? Or Ray-Ban sunglasses? A lot of people are wearing those glasses because they're really useful, you know? They're lightweight and convenient, so it just makes sense. Even though this is just a rumor about Apple, I can only say that if wearables really do move in the direction of Meta's smart glasses in the future, I think that would be a great thing, a huge plus, actually. Right now, Meta's smart glasses are still the mainstream, holding 78% of the market. Meta dominates the market. If Apple develops something good, it's a big plus. Currently, iPhone 17, Air, Pro, Pro Max sells exceptionally well. Apple's stock climbs, recovering gains. As long as the 20-day moving average holds, no worry. Lastly, Meta, I mentioned it's showing its true colors. Here's what I mean. Today, they announced that starting from December 16th this year, good evening, Black Grid, he said that from December 16th, as long as users interact with Meta's AI, then I will recommend ads and content to you, and users cannot launch this function. As long as you use Meta AI, whether you use smart glasses, Facebook, IG, or anything else, as long as you use Meta AI, which now has about 1 billion active users per month, I will advertise to you. What I mean is that you usually talk to AI, right? You ask AI a lot of questions. For example, if you ask it which company has the best mountaineering equipment recently, what kind of equipment should I prepare for mountaineering, it will give you a list, right? Well, if you ask it what kind of mountaineering equipment I should prepare recently, it will determine that you have a need for mountaineering, so it will start to display ads about mountaineering equipment on your mobile phone, your IG, your Facebook, and your Costco items. You can't refuse because it knows that you have this need because you asked the question. So, as long as you ask AI anything, ask a lot of things. They know what your needs are and your privacy will be leaked. Once your privacy is leaked, you will be controlled unconsciously without knowing it. Because you must have a certain need before you ask some questions. For example, I have a headache recently. What medicine should I buy? Is it Putin or EB, right? I want to go hiking. I want to go to Shuashi. Which Shuashi shoes should I buy? I want to watch a movie. Which movie is the best-selling? Then they will use it to put relevant advertisements or information they want to show you. This thing is we can only say that it is a very bad thing, but it has to be done because these AI companies must make money from this. They must make money by placing advertisements. So they must know what you want and what you want before they know what to throw at you. So when something's thrown at you, you naturally pay attention, you focus on it, because you need it, right? Then you buy it. That's why when ads are placed, they become effective. Meta is doing this now, and it's beneficial for Meta because it makes money, just like Google's ads, exactly. You keep searching for ads, or ask Apple something, and notice, strangely, they show you related info. That's because all these companies must make money this way, no other way. So in the future, when you use AI, you can use it free, but they want your personal data, usage habits, and what you want to buy. They rely on this to place ads. Otherwise, why let you use AI free? Why let you use OpenAI, Anthropic, or whatever, free? Will they just let you generate a 3D doll image for nothing? A 3D figurine. You're so happy using OpenAI or whatever, drawing a Gemini or some 3D figurine box. Wow, so cute. But what do they earn? They've spent $60, $70, $80 billion in capital expenditures. What will they get back? Will they just make figurines and give them to you? Impossible, right? And it's not like you'll use AI to make a figurine and then order from Meta. No way. So Meta has to. How do they make money? Advertising. Future giants like Apple, Google Gemini, Amazon's Anthropic all rely on this. So our privacy is never truly closed off. It's always negotiable. Whatever you ask, like what to take for depression, that's all part of it. As for Meta, its short-term technical indicators have been weaker recently. Be cautious with this neckline. Yesterday, it dropped about 2.32%. Pay attention to this neckline. Yesterday, it was slightly breached. In the short term, it's best to get back above it today or tomorrow. If it quickly gets back above, there's a chance to resolve this short-term top. But if it can't, pressure will be greater, because among the Magnificent Seven, it's one of few that has fallen below the key moving average and is nearing the neckline. If this neckline breaks, the next support might move closer to the 200-day moving average, so be cautious. As for Meta, its true colors are that it wants to make money. As a business, that's its goal. But while making money, when you ask AI certain things, some questions you should ask and some you shouldn't, so exercise self-control or discretion. Lastly, we probably don't have time today to talk about the Citigroup news, but that's okay. We'll discuss it tomorrow due to time constraints. Tomorrow, I'll explain why so many tech giants and companies have spent so much money, yet still can't get a return right now. Cash flow and business activities aren't profitable, and investments haven't been recouped. Why do so many companies still spend billions to develop AI? US and European pre-market. Fair ask is up 7.42% pre-market. Western Digital and First Solar are up 3% pre-market. AMD, Advanced Micro Devices, is up 2.48% pre-market. Sotheby's is down 12%. Baxter and AbbVie dropped 1.9%. Broadcom, Tesla, etc. all rose about 1.5% in pre-market trading, providing support for the U.S. stock market. The Dow Jones Index remains strong, staying above both the 20-day and 50-day moving averages. The Philadelphia Semiconductor Index and S&P 500 Futures Index show bullish patterns. As long as the AI bubble hasn't burst, everyone should try to make as much as they can. Make as much as possible, but stick to one principle. When stocks hit new highs, don't chase them. There will be pullbacks, so buy in slowly on dips, take profits in batches, and build positions gradually. Clearing positions in stages is a safer approach. Don't short the market. That's all for today's content from ChunChingNet. I'm Kaiban Qiancheng, bringing you the latest updates. When class is over, remember to like, subscribe, and share. Finally, I wish everyone smooth trading, and we'll see you tomorrow. See you.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.